Hello and welcome to this Mining Journal panel focused on West Africa and West African gold specifically. My name's Chris Cann and I'm lucky to be joined by a grouping of West Africa explorers, developers and producers, a risk specialist and an equity analyst. So there's going to be a lot to squeeze into this session as we explore the opportunities and the risks across the region. With me specifically, I have Jorge Ganoza, President and CEO of Fortuna Silver, Chris Van Wijk, Managing Director of Marble Gold, Dave Anthony, President and CEO very recently of Asante Gold, Charles Gibson, Director of Mining with Edison Investment Research, and then Eric Humphery-Smith, who is Senior Africa Analyst with Verisk Maplecroft. So let's get straight into it. West Africa was a frontier region 20 years ago with plenty of opportunity, but then plenty of risk as well. And so I'm keen to understand if that's changed at all, or if it's still a high risk, high reward environment. Dave, potentially with your background with African Barrick going back a few years now, it'd be great to get your view to start.
Thanks, Chris, and good morning. I'm in Toronto today, so it is morning still. But look, 20 years ago, I started with African Barrick Gold at Bullion Hulu Mine, and at that time, community relations was not a core business strength. Security was not a core business activity. The factors and the behaviors that go around sustainable development really wasn't a big part of the mining business. And over the last 20 years, these activities, these skills have become core business activities. And if you're going to be successful, you better be good at all of them. I wouldn't say that you put them in front of drill, blast, load, and haul and processing, but they are very closely aligned. And if everybody on the management team is not aligned with CSR, with sustainable development, with securing the operation, you're going to have a lot of problem. So these are things that need to be developed and maintained and sustained. But having said all that, I believe you can operate mines in West Africa in a safe and secure manner. And one of the real benefits that has happened over the last 20 or even 30 years is discipline strength in terms of having really capable people available to run your mines and operations. I've just finished kicking off the refurbishment at Bibiani Mine. We're going in very good order, and on a total team of more than 1,400 people, we've got 2 expats. Everybody else is really, really solid. I'm really, really proud of what the team is able to do. And not just on the ground, but also if you go to your team and say, hey guys, we're looking at an acquisition, let's put together a due diligence team. Boom, just like that, you've got 5 or 6 very capable people at another mine site going through line by line. Does this investment make sense? So for me, West Africa is a delight to do business. We've got great facilities. I work in Ghana, as you can imagine. We've got great facilities close at hand. We don't have to send equipment out of the country or overseas to get refurbished or serviced. Everything happens in country. It's as easy to do business now in West Africa as it is north of where I live in Sudbury.
Chris, interested to hear your view. Similar background with mid-tiers and majors across Africa over a number of years. Does that ring true for you? I'm picking up specifically on that point around maybe as a frontier region, more or less 20 years ago, not having that skills base, that particular point. Are things easier in that respect these days?
Yes, I believe so. When I started back with BHP in, it would have been the early, more mid-2000s in Guinea, there were really no skills around whatsoever. And I think through, the auspices of groups like Amira, and engagement with, the BRGM, certain French groups, there really has been a great development of the skills amongst, technical professionals in West Africa. So it is much easier to get qualified people, and there are even amongst the sort of the blue collar workers, places like Cote d'Ivoire, you can get really good high quality welders and boilermakers and mechanics and so forth. So yeah, I think the region's come a long way in a short space of time, and that's partly because there's been an extended period of peace, I suppose, with the exception of the insurgencies in the last few years, anyway.
Eric, I can see you nodding along there, but at the same time, it's probably a good time speaking about some of the more general risks and some of the political instability that some people would traditionally associate with Africa and West Africa specifically. From your understanding, how the dynamics changing as the years have unfolded?
Well, I think first of all, just to echo my sort of colleagues' sentiments around sort of improvements in human capital, ease of doing business. I mean, there's been a real sea change in sort of the quality of workers in the region, and you can really see that in just how easy it is for foreign operators to come in and set up shop. To answer your question around the sort of political, and I'd say more so in recent years, as Chris was hinting at, the security risk. I mean, it's sadly not a purely positive story, really. In the last sort of 3 to 4 years, and especially in the last sort of 12 months, we've seen what have been assumed democratic gains pretty much collapse. So namely in Guinea, namely in Burkina Faso and Mali's just kind of going along the same track as well. And something that we've been looking a lot at Maplecroft has been the threat of contagion really into more established, stable jurisdictions. So Ghana, Cote d'Ivoire, where they've got an increased threat along the northern border, and potentially also moving into some of the larger producing mines in Western Mali. So I mean, really at the moment, it's hard to sort of say that in political terms there's been that much progress, but it's also relative. And I think 20 years ago there was also many military regimes around the region as well. But yeah, as I say, the operational aspect is a lot better, and fiscal terms as well have improved a lot to attract investment. Okay, so I mean, just generally, operationally, we're seeing a lot of progress. Politically, we could have seen a bit more if we were kind of being optimistic. I wanted to bring in Jorge in a moment, specifically on the deal that you guys did with Fortuna last year in Rocks Gold, on the opportunities. But very quickly, while we're still on that kind of looking back and where are we now space, Charlie, if I can bring you in here and just get an overall markets view. There was a lot of excitement, if we go back to the previous boom, about West Africa as a frontier. A lot of virgin territory and a lot of opportunity was seen. Are we seeing the same kind of enthusiasm this time round as the gold price has gone on another run?
To some extent, I think it's worth just remembering where we come from 20 years ago. I remember I visited Bibiani about 25 years ago. It was then under the ownership of a completely different company. From memory, it was Ghana Australian Goldfields. And, it was a jungle, quite literally. If you think about West Africa in 2000, it was Obuasi, it was Sam Jonah, it was Tarkwa, which was then being Goldfields of South Africa was doing the exploration there, and it was Mark Bristow and Randgold Resources, and all they had there was, I mean, I say all they had there, but what they had was Marilla. But the place has changed actually beyond all recognition. It was mostly the South Africans doing the exploration up there before. Mark Bristow was described to me, I asked someone when I was down in South Africa, I said, what do you think about Randgold Resources? And they said, that's just Mark Bristow running around West Africa with a checkbook. That's the way it was described. And, you now look at West Africa and, what it has the most discovery, in terms of millions of ounces of almost any region in the world, one of the greatest levels of investment, one of the largest growing areas of gold output, taken as an area together, one of the largest outputs of gold in the world, on a par with the likes of Canada, Australia, those sorts of countries. That it's come from being not an exploration frontier. I was going to say backwater, that would have been wrong. It's come from being an exploration frontier to being a very, very mainstream part of the world's gold producing regions. And I think that, one of the other things you have to look in tandem with that is the politics. And, some of the trouble we see in West Africa today, at the current time, if that had happened 20 years ago, that would have sent, most of the exploration groups, and certainly the big boys, they would have been running for cover back at their corporate headquarters, wherever they were in Johannesburg or Sudbury or Vancouver or Denver or wherever they were, and they would have done nothing for the next 5 years. Now, actually, we have a lot of production coming out, whatever the difficulties, the political difficulties, the gold mines, by and large, keep producing. And actually, I think it's a great story of A, growth, B, resilience, C, strength, and an example to some extent of how an industry can support governments and vice versa. And the fact they're mutually supporting, some of these shocks that are occurring now, 20 years ago, as I say, they would have destroyed a nascent mining industry. But now, I won't quite say the industry and the countries take them in their stride, but it's pretty close.
Jorge, I'm really interested in that. It's a nice segue into probably your story and the experiences you've had across Fortuna and then the deal that you did last year. So an established producing portfolio in Latin America, silver focused and looking for growth, and you've chosen West Africa as your as a destination for that growth effort. What attracted you to the Rox Gold portfolio specifically, and then where do you see the regional opportunities for West Africa for Fortuna?
Well, first, I echo everything that has been shared by the panel members here. What we find today in West Africa is not just a world-class mineral endowment, but a place where you can effectively develop mines. It's a place that over the last decade has established itself as the second largest producing region in the world. If we group the gold production of Ghana, Burkina, Cote d'Ivoire, Southern Mali, Guinea, if we group that geography, it is the size of roughly the state of Texas. And that geographic area is the second largest producing region in the world behind China. China in 2020 produced 380 tons of gold, and this region produced 366. So it's ahead of Australia, US, Russia, Canada. So you don't do that only with geologic potential. You also need supporting governments and that over time continue fostering the development of the industry. So that's a trend that we've seen, we observed, and today it's a place where you can effectively develop mines, as I said. You find all the necessary industry clusters to be effective, efficient, all the service providers, all the knowledge that the business requires is there at hand. We had in the month of August at our Burkina Faso operation, the Yaramoko mine, we had a pinion failure in our SAG mill in August. We were quickly serviced from Ghana, and the mill was up and running in 3-4 days, right? So you're not out in the middle of nowhere. No, you are well served by all these, well-established industry clusters. You find competent contractors, engineering firms. So that's something that we clearly identify, and that's why for us it was just strategic to seek growth in a place where we can, be effective. And Rox Gold, we did not acquire assets, with the Rox Gold business combination. What we acquired, in our view, was a platform for business, so we can hit the ground running. Yes, we were well established throughout Latin America. We operate from, Mexico all the way down to Argentina, but we clearly recognize that West Africa has its own, requirements based on expertise and whatnot. So we were able to retain a strong team of operators with vast experience in West Africa, and the knowledge, the know-how of how to relate and manage government relations and the local relations as well. So we have an operating asset and a development project, the most exciting development project in Séguéla in Côte d'Ivoire, right? So we're currently building. So the acquisition was, for us, it was a platform for business, a way in which we could hit the ground running in West Africa, right? Yeah.
Okay. Chris and Dave, specifically, obviously looking at Mali and Ghana respectively, looking at the mineral trends that we're seeing there in the greenstone belts. As a frontier region 20 years ago, I think one of the attractions was the fact that modern exploration techniques hadn't been used over a lot of the ground. Just in your kind of backyard, in your portfolios, where are the opportunities now? Has a lot of the ground been covered, or do you still see a lot of untouched upside there? Maybe starting with Chris this time.
Yeah, thanks. Well, look, I can mostly only speak for Mali because it's obviously the country that I have the most experience with. But the biggest regional survey in Mali was done by the UN in the 1990s. And, particularly assay technology has come a hell of a long way in that period of time. So, nowadays we tend to use a 4-acid digest, which allows you to do lithological discriminations. And, you can sort of, I suppose, see through the regolith, if you like. And the regolith, the stuff that lies over the top of the rocks in West Africa, really is quite a big problem. So I would say that, to say that the region is not still a frontier of exploration is not strictly correct. Because exploration's been done there doesn't mean that exploration has been done thoroughly or properly, and shouldn't be revisited. So that's something that Marvel Gold has been trying to do. We've been trying to go back and take geochemical surveys and geophysical surveys using cutting edge techniques and apply those to areas that probably haven't seen thorough exploration, using the techniques that are being used in the more cutting edge places like Australia today, where exploration has got a lot harder.
Okay. Dave, you're scribbling some notes there. Can I trouble you for a view on Ghana?
Thank you, Chris. I think there's two parts to the equation. Number one, what we've seen at Bibiani is that whereas 20 years ago or even 25 years ago, people had a look at the ore body, they had a look at the potential, and they got busy mining and developing. There has been, and I'm not a geologist, by the way, I'm a mining engineer, but there has been some significant advances in exploration technology, but also in terms of interpretation. What we're finding with Bibiani, we put about 20,000 meters into the ground in the last 6 months. We're finding a lot of gold that was not found 25 years ago. So we're just seeing the deposit and the opportunities for exploration increase. And I don't want to talk in terms of magnitude, but it is really, really significant. The other part relative to exploration, we have a lot of operations now in Ghana that are big tonnages and low grades. And 20 or 25 years ago, mining 7 or 10 or 12 million tons a year at 1 gram was not on the radar. Today it is, not only because of the economy of scale, but also because of some of the technology. 25 years ago, 25 microns was considered to be pretty fine. Technologies that we have today get us down to 10 or 11 microns in terms of grind size to get liberation, and deposits that were otherwise considered to be refractory are now just considered to be in need of more work. And this opens up a whole lot of opportunity that was otherwise passed over.
Okay, Charlie, I mean, we're kind of looking across, usually in the exploration sector, we kind of think about small junior players, but what are you hearing from the majors in terms of very large scale, systematic, well, better funded exploration programs and how they're approaching West Africa?
Well, I think you can certainly see compared to 20, 25 years ago, that is where the majority actually in terms of pounds, shillings and pence or even US dollars, where the majority of the action is. And, it's only 4 years ago that Mark Bristow described Cote d'Ivoire as having the largest undeveloped greenstone terrain in West Africa. You look at the amount of money that the likes of Endeavour Mining is putting in, $80 million a year, give or take, over the whole region, but in Cote d'Ivoire, in Burkina, in Mali, and further afield as well. So there's a lot of money. Newmont is there, we know that, but they're putting large amounts of money that they're backing themselves with large amounts of money to keep their production pipelines fed, which is exactly the right thing to do. But the point is, I think these are big budgets, and they are very, very confident about the exploration that they're doing, and almost universally between them, they agree the fact that it is still very, very underexplored. And that's the telling thing. That's why they're putting all this investment in, because they believe there's more, not only near existing mine sites, but also further afield as well. So I think judge them by their actions, if you like, not their words. But both of these in this particular case are coming together, and they're saying there's a lot of opportunity, and they're backing that with big budgets.
Okay, Eric, if I can bring you back in here, it sounds to me like there's no shortage of interest or capital being put into the ground from an exploration and a production perspective. Are we seeing an improvement in the way, or a change in the way that companies are managing the risks on the ground? You said operationally, a lot of progress, politically and political stability, still a fairly risky environment. Have we seen changes in risk management strategies? And what are some of the things that you would be advising clients to be undertaking in order to keep a handle on the risks that do exist?
Yeah, I mean, as Dave was saying, at the offset, there's been a real sort of shift really in how mining companies approach this. A lot of the clients that we work with, are coming to us with, ever more granular questions around certain issues, whether it's dealing with kind of, their social license or, certain environmental risks that they're worried about. We've seen, increasingly active and loud NGOs and local journalists kind of scrutinizing a lot of these issues that mining companies are exposed to. So really there's kind of been a shift in that sense that's forced mining companies to be more responsive and ideally proactive to avoid any surprises down the line. If I could just kind of go back to what we were saying earlier about sort of the overall political risks being, in the short term at least high in some countries, but operationally not affecting things. As you see, I guess, reserves and ore grade declining visibly in the region with, potential upside in, unexplored areas. One thing that I can say, and what we've seen around the region is, governments really, regardless of their political leanings, being really pragmatic in their dealings with the mining sector. So even in the case of, for instance, a military coup, as we've seen in a few countries over the last few months, the first thing that, for instance, the colonel in Guinea said was, don't worry, we will let mining companies continue to operate, which is really amazing, really, when you think they have this acute awareness of how markets work and the impact that their words can have on the wider sector. So I think we're seeing a lot more of that. Even if there is political instability, and this is part of the kind of democratic transition of the region, governments increasingly are aware of the impact that sudden policy changes can have on the sector.
Okay, Charlie, a similar question from a investor and markets perspective. What are you looking for when you're reviewing a company and equity in terms of how it's managing its risk? Are there certain do's and don'ts that you look out for, or is it very much an individual case by case and a management team by management team prognosis for you?
I think it's very much individual management team by management team, but you can see what works and you can also see what doesn't work. But, in terms of what does the region need, the key thing for investors is stability. it actually doesn't need to be stability over the entire country, but the more stability there is closer to the mines that are operating, the more investors like it. Now, obviously, there are ideal options. There's stability and democracy is probably as the best you can hope for. But the stability is the thing, or let me put that the other way, the absolute terror of all investors is instability. And actually, it's interesting how much, Eric there was talking about coups and such like. And again, 20 years ago, just the association of the word coup with a country would have had investors running for cover. But it's interesting that, various political factions now appear to have taken this on board. And almost the first thing that happens when there's a coup d'etat is the new leader says, but the mines will keep running and we support the mining industry and we want to, because they understand the broader economic imperatives that they're under as well. They want gold exported from the country, they want dollars coming into the country, and they don't want to do anything to upset that particular apple cart. So, the converse is instability is the terror of all investors. And, if it's seen to get out of control and it's seen to move from one part of the country to become, more broadly manifesting itself, or to move from one part of the country to another country, that's when investors get nervous. As long as that's kept under control, as I say, ideally you aim for stability and you aim for democratic stability, but as long as that's kept under control so that investors know where the danger areas are, and they know they can avoid them, or they know if they go into them, they know what risks they're taking on, that's the absolute key thing, I think.
Okay. We'd like to go around the companies now and these are, I suppose, the view from the outside to some extent. And then obviously from the companies, we're talking about groups that are on the ground, that are physically taking on these risks and are actually managing those at the moment. Jorge, if you don't mind, if we start with you. I know we've, at the risk of doubling up on the conversations we recently had, you've had some very recent experiences with Burkina Faso and the coup there. How did the management team approach the situation as you could see it developing leading into the coup, if you got some foresight on there? And then what's been the approach to managing the situation in country and operating with that political backdrop?
Yes, in the case of Burkina and the political instability all the entire situation is aggravated by the security situation in the country, right? So we already operate in Burkina under severe or heightened state of alert and controls in place, right? So, after a couple of days when the dust started to settle, we were able to reach out to authorities that we have interactions with in the Ministry of Mining and Economics, Finance, and our business was not interrupted. No, we were able to operate continuously through the process, and we had a couple of days of standstill with respect to movements, but things were up and running shortly after. The mine did not stop operations. We again are always well procured in terms of consumables and whatnot. We already operate in a heightened state of alert in Burkina because of the security situation, right? But I echo what Chris said. No, I mean, at least, and we would all love to have our mine on the Walker Lane trend there in Nevada or somewhere, but we go where the assets are, where the gold is, and the political process still maturing, to say the least, to put it nicely, in the region, and we need to have tolerance and stomach for this. But the continued theme is support for the development of the industry, and that's something that we see and we value, right? In spite of all of this turmoil, we see continued support towards the development of responsible mining, right? Yeah.
Well, I mean, you're speaking about having an underlying tolerance or stomach for a level of risk and potentially operational disruption due to that risk. Is that something that is just an accepted part of day-to-day business, or does that have to underscore a more formal risk management strategy for your government community relationships as well as your operations?
We operate in 5 different countries, and each one has its own risks and opportunities. In the particular case of Burkina, where we have this conjunction of security and political instability, which is quite recurrent. No, we monitor it closely. We tend to form opinion and put ourselves in different scenarios. But again, we are located in an area that today is not contested by the security issues and coming from the north and the east, in the particular case of Burkina. But we assess the situations. It's an evolving situation there, and we monitor it and deploy capital according. Today, our largest exploration funding across all sites is in Africa, right? And so we continue investing and monitoring the risk. Yeah.
Chris, if you don't mind me coming to you next on Marvel's approach to that. You're obviously not in operation yet. How does your approach to risk differ maybe from Jorge's, or how do you set yourselves up to manage the risks that your investors are asking you about, and how do you see that changing as you move into more advanced stages of development and then production?
Look, I suppose there are 2 aspects to the risk. There's the political risk and then the security risk. Certainly amongst my investors, we're obviously, as you pointed out, an earlier stage company or exploration venture. So I think there's a growing recognition amongst our investors that coups are starting to become the way that these West African governments are changing or turning over. And as several other people have pointed out, all of these governments are keen to not kill or strangle the goose that lays the golden eggs. So in terms of our operations, the day-to-day hasn't really changed very much. The upper echelons of the regime may have changed, but the guy that you actually deal with at the ministry that handles your tenements or your reporting or your payments or what have you, those relationships seem to stay intact from one regime to the next. In terms of the actual security, we've been very fortunate. In southern Mali, this isn't an area that's been affected by any of the sort of terrorist kind of threats. So we haven't had to really mitigate the risk in terms of adding security or procedures or what have you. But that said, we do use our HSEC and particularly the community part of that to as our first line of defense. The community is invaluable in sort of telling us what's going on and who's operating in the area, and and whether it is safe for our expat exploration manager to be on site. And there have been a couple of occasions where we've had calls to say your expats can't be here for a little while and you need to get out. So I think it's definitely not a static game. You've got to have your finger on the pulse, and you need to be tapped into all of the the undercurrents that are at play at any given time in West Africa.
Dave, I could see you smiling. It sounds like you can relate to some of those experiences that Chris is going through. I'm interested in how maybe the risk management strategies that you would have dealt with in previous companies, maybe African Barrick 10 years ago, through to how you're approaching it now with Asante. Are they more formalized these days, or is it still, yeah, as the guys tend to be suggesting, you have to be able to bend with the breeze a bit to manage risk in West Africa?
I think, to come back to the earlier part of your question, managing risk, managing security in Tanzania in the early part of the 2000s was something you had to be well equipped for. And you were pretty much on your own relative to support from local security services. So your security team was, in that sense, logistically well equipped. And I'm talking about guns, dogs, rapid response capacity, and very large, pretty well trained security teams. What we find in Ghana, because it's very well established, there's a high level of security. It's actually the only place I've ever been in Africa where I feel quite comfortable personally just walking down the street to get a cup of coffee. I find it's very orderly. The security procedures and the security resources are well defined. What you're expected to do as a company is very well defined, and it starts with, we don't have guns. Okay, we rely on local authorities if that sort of intervention is required, which it rarely is. The chiefs locally control who gets in, so we don't have a lot of incursions from less savory groups from somewhere away, and the higher levels of government provide solid security services when we need some support. So I find Ghana is really, really orderly relative to my experience in Tanzania or relative to my experience around the world. I mean, I worked a little bit in Brazil. I worked a little bit in Ecuador, where as a vice president or a COO, if you wanted to go somewhere, there'd be a truck with guns behind you and a truck with guns in front of you. And that to me is a whole different level of being equipped and being prepared to address immediate issues. So for me, Ghana is very, very orderly.
Okay. Keen to understand how the panel as a whole, or actually as individuals, is looking at the future and the future opportunities. I think it's fair to say from what we've heard so far that politically things are still unstable in much of West Africa, and it seems to be something that's fairly changeable, but operationally and from a business perspective, managing that risk and actually getting things done is becoming easier and easier. If we're looking at the places across West Africa that potentially offer the most opportunity from both a geological perspective, but also an improving operational environment and potentially political environment, where are the places that we should be looking, and where are the places that investors should be looking? Obviously, the people who are running companies on this panel are going to have a vested interest in this question. So maybe we can start with Dave and Chris and Jorge and just get from the areas that you're operating. What's your kind of 12-month and then maybe 5-year view on what's happening in Burkina and Cote d'Ivoire and then Mali and Ghana? Maybe if we start with Jorge.
Well, on a short-term view, how we put it is we're harvesting the portfolio, right? So we are investing heavily on our brownfields opportunities, both in Burkina Faso and Cote d'Ivoire. We should have a new mine in production by mid-2023, Séguéla mine. And we are continuing to get a lot of reward from the exploration there. So for the short term, we'll continue investing heavily on our brownfields portfolio. More medium, long term, I mean, we see just tremendous opportunity across the region of West Africa, the Birimian belt, and we look forward to continue investing heavily, and we go our investment at a budget time. We have our LATAM team competing against the West African team for funding, and it's stiff competition, right? Today our largest exploration funding is going to, and capital budgets are going to West Africa today, and that might continue.
Dave, what's your outlook?
Look, I'm focused obviously in Ghana. We have a lot of activity planned close to Bibiani or in the region. We're not at this point looking outside of Ghana, but we find, as I already mentioned, the goalposts don't move. The regime that we had relative to mining today is very much what it was 5 years ago or 10 years ago. So we find it very easy to manage. With respect to the ground that's available, we have a lot of prospects close to the mine or elsewhere in the south of Ghana that are very promising for us. So that's really where our outlook is immediately.
Politically speaking, in terms of the risk environment, is your view that it is what it is, and you're managing it and you're happy with it, or do you see things improving, and operationally things to continue to grow economically and operationally and business-wise, things to improve?
Look, I think in terms of the political environment, people could always make a case that it could be better, but in my view, it's very supportive. It's very good. We don't see ourselves having to address new issues falling out of the sky. There's an ongoing dialogue, and generally it's pretty constructive. Certainly, in terms of getting Asante off the ground over the last year, getting government support relative to permitting issues has been just excellent. Part of the equation there is the company is largely owned by Ghanaians, and we've got a lot of Ghanaians on the board of directors who are able to understand how to engage constructively with the government. I think the one key that we've found, or that I've learned, is that if you want to get something done, start the discussion with the government early in the piece, and not after everything is said and done with whatever your negotiation is. If you go to the government authorities and say this has to get done right away, and they haven't been part of the equation for weeks and months, then things can get protracted. But if you look at the government as a partner, and they have a 10% free carry. If you look at the government as a partner, treat them as a partner, you can normally get things to progress in a reasonable period of time.
Chris, what's your outlook for Mali?
Well, we're obviously coming at it from an early stage exploration perspective, but certainly, we've been pretty successful in terms of our exploration, in that we've managed to double our resource in a little over 18 months. Likewise, our land position's gone from 100 square k's up to 830 square k's. So, we see tremendous opportunity there in terms of being able to grow our land packages, and the fact that there haven't been too many new listed incumbents into Mali. So for the foreseeable future, Marvel is going to stick with Mali, and we're going to systematically try and work our ground position and add new ground, on an opportunistic sort of basis. I think, it's early days in Mali really for more modern exploration. As I said, the last systematic data set was collected in the 90s. So we're pretty focused on Mali. The operating environment there has been good to us so far, and that's where we're going to stick.
Okay, Eric, from your perspective, looking across the region, and probably obviously you're taking a more general political and operational risk view, probably more political. Where are you seeing the opportunities there, and what are the areas that potentially give you a little bit of concern?
Well, I think, as we've kind of discussed throughout this panel, it's clear that, business as usual can continue. There's no major impediments that prevent operations from being carried out. So I think that's generally a sign of, the state of the sector and its relations with, local communities and government as well, to be able to kind of shelter operations from a lot of those risks that we've discussed. And clearly there's, I'd say still a good decade or two of strong sort of output coming from the region in gold terms. In terms of some of the challenges, one thing I would say, from what we were discussing before around, some of these, unconstitutional governments relying on mining revenues for income and their sort of survival, is that we're not seeing any urgency in a democratic transition in those cases. So I think Burkina's committed to 3-year transition. Mali, I think, as much as 5. Guinea, no clarity whatsoever on when it's going to hold elections, organize a transition. So I think this is the challenge, really, reputationally, by being in country with military governments that just don't have much of an incentive to get out of the way, really, with regional bodies not being able to pressure them. So I'd say that's one risk, that these military governments are drawn out for longer than what was intended or hoped. I'd say another issue that's really salient at the moment is around social risks, and it's particularly around sort of livelihoods being pressured. So we've already had, the pandemic squeeze, families, and the pressure that puts on households in the region, and it's no surprise then that we've seen an uptick in ASM as a result, illegal in some cases, to kind of make ends meet for some of these families. So managing that risk, I think, is going to be key for miners over the coming year, especially as the situation in Ukraine evolves, and you see pressures on things like food prices and the like on that will affect African families a great deal. And then I think the last thing to kind of note is also the pressure on state finances and what that might do in terms of their kind of policy formulation, because Dave mentioned it around Ghana, which is comparatively speaking a far easier jurisdiction to operate in, but even there we've seen some piecemeal attempts to kind of debate, for instance, of windfall tax, which has been on the cards for years, but now that they're trying to kind of increase their stakes in extractive industries, namely in the oil and gas sector, with huge funding required for that, we might see some smaller kind of piecemeal increases on sort of tax burdens and the like for mining companies.
Okay, thanks, Eric. Charlie, just conscious of time, if we can finish on this one with you. If companies continue to be successful, as they seem to have been definitely in recent history, in managing these risks, when you get buttonholed at a conference or a reception somewhere by investors and they want to know where they should be looking in West Africa, if they're taking that kind of, that what's the next big opportunity, what's your view? What do you tell them?
I think that, Dave mentioned you can always make a case for an area being better, and I think that's true. But actually, as far as mining is concerned, I think the area just needs to be good enough, and to avoid any of those shocks, things not falling out of the sky, as he put it, and if you compare that with East Africa, Tanzania, and the problems that African Barrick Gold had, 8 years ago-ish, in Tanzania, when the Tanzania government suddenly said, right, that's it for the export of concentrate, and that put a real spanner in the works of African Barrick's business and caused them no end of trouble. So as long as we're not seeing things like that, I think the area just has to be good enough. The endowment is there, we know that. For Endeavour's $80 million a year, it expects to find roughly 3 million ounces of gold. And just, while we're on the subject, I think the other thing we could see, as long as things remain stable, we're beginning to see multi-million-dollar takeover deals, the likes of the Semaphos and the Tarangas, which were taken over by Endeavour. So, there's potential for more consolidation in this area as well. Don't, as the kids say, come at me for this, because I know you have your own very good risk survey. It's a more objective one, but the subjective one is done by the Fraser Institute, and the way they rank countries at the moment in their last survey, they've got the order as Mali, followed by Ghana, followed by Guinea, followed by Burkina. Now, both Burkina and Ivory Coast have had a bit of a hit recently, but what's really interesting about the region, I think, is whenever a country has taken a hit, and at various points in the last 10 years they've always recovered pretty strongly within 1 or 2 years. So let's hope the same thing for those countries that have taken a hit. Let's hope that everything stays on as stable a footing as it can. There are no upsets, in which case they will come back into vogue, into focus. They will start attracting investor dollars. But for the moment, that's the one I'm going to leave you with. Mali, Ghana, Guinea, and Burkina is the order.
Okay, thank you. We're going to have to leave it there. Eric, Charlie, Jorge, Chris, and Dave, thanks very much for your time.